Hi, John from York Bay Financial Partners, looking at investment markets. After Trump's re-election back into the White House, he's now got control of the Senate and also the House, which potentially should make it easier to get his policies through. Although the majority in the House is really razor thin, so it could be some interesting times over the next sort of couple of years. But also as well, the fun and games have started with Trump and his team yet to sign the sort of ethics agreement that will allow him for the transition of power into the presidency. Also as well, Elon Musk seems to be having quite a bit of influence out there in terms of sort of staffing, sitting in on meetings and phone calls with world leaders. And that's just going to be interesting to see how much influence he has. And obviously the big worry from the market's perspective is that Trump getting re-elected now is going to see sort of tariffs, we'll see tax cuts, and potentially that will see the deficit increase. Now some of the estimates are sort of talking about sort of $2 to $3 trillion increase. Others put it around sort of $6 to $7 trillion. And given that interest payments currently around $880 billion a year, obviously if that deficit increases, then that interest payment goes up, and that's a little bit worrying. Especially as we have the ongoing sort of fight with Congress about the debt ceiling. So potentially, despite the Fed cutting interest rates for a target range of 4.5 to 4.75 at their last meeting, potentially now we're looking at less Fed cuts over the next sort of 6 to 9 months. And certainly the market seems to be pricing it that way. The 10-year is up at 4.43 and the 2-year is up at 4.37. Now that's up around sort of 50 basis points over the last sort of three to 4 weeks. And certainly on interest rates now, it'll be interesting as well to see if Trump does try and interfere with the Fed's interest rate policy, because the Federal Reserve needs to be independent and avoid of political pressure. So despite equities trading up to sort of record highs on the hope that we're going to see lower tax rates in the US and sort of corporation tax, the debt markets really have a slightly different view. Also as well, supposedly Trump has made a call to Putin and told him to rein in the aggression in Ukraine. If you remember, pre-election, Trump was saying he could have this war solved in a day. But obviously Putin has denied having this phone call because, he doesn't like being told what to do. Oil's traded back below 70 bucks, currently around sort of 68.70 and change. Now in the UK, the Bank of England did deliver on its rate cut, taking the base rate down to 4.75, and certainly with inflation at well below 2% and the UK economy very sluggish, we expect further rate cuts over the next sort of 6 to 9 months. Now in the EU zone, obviously very nervous about a Trump presidency in terms of sort of tariffs for EU businesses. Now in Australia, with the Reserve Bank leaving the cash rate unchanged at 4.35 and potentially no rate cut there until sort of February 2025, the Australian economy is pushing along at an okay rate. We're seeing a little bit of an increase in spending activity out there, but also as well the housing market's starting to pick up as well. Now here in New Zealand, good news for the dairy sector as Fonterra have increased the mid-price payout to $9.50. So that's certainly good news for the dairy sector and good news for the New Zealand economy in general as well. Now, retail sales are starting to pick up a little bit as well, showing the third month for a little bit of an increase. I mean, it is coming from a very low base, and that's obviously on the back of the sort of tax cuts that came through from the new government in July, but also as well the rate cut from the Reserve Bank. Now, with the Reserve Bank meeting again at the end of this month, it's widely expecting at least a 50 basis point cut, but potentially 75 is on the table. Because the New Zealand economy is sluggish and weak, inflation is falling, and the next meeting from the Reserve Bank is not until mid-February 2025. On the Reserve Bank releasing its inflation sort of targets and forecasts for the next sort of few years, potentially for the next sort of couple of years, they're looking at inflation being sort of 2.1 to 2.3 over that time. And if that is the case, that's obviously pretty close to their mid-target range of 2%, and potentially then further rate cuts are on the cards for 2025. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. I'm looking forward to speaking to you soon.